Hello students and welcome to this video. This will serve as a short lecture that is based on flexed budgets. I don't think any of us have gotten to the explanation of this new topic. At most, we explained cash budgets. So yes, this will serve as a lecture just to explain what flexed budgets are all about. This is really a simple topic, and in my opinion, I think this is one of the topics that you can really do well in the exam. All right, so as I said in the introduction, the purpose here is just to demonstrate the basics, just to show the calculations around the flexed budgets. Please take into account that I have not gone into the theory part of flexed budgets. You do have a textbook, you can read up on that quite extensively. The purpose of this is, of course, not to read the textbook for you. I'm sure you are most capable of doing that. So the first things first, and that is to ask the question, but what are flexed budgets? So flexed budgets concern themselves with revenue and costs at different activity levels. So an activity level can be defined differently in different questions. An activity level may be a machine hours, it may be labor hours, it may be the number of units that are produced. So each question will provide you with a different type of activity level. But flexed budgets look at what the costs and revenues are when a business operates at different activity levels. And then it compares the budgets with the actual results. So I've put a note there to say it's quite important that the budget that you are going to calculate in this process should be adjusted to the actual activity level that is provided. All right, so this might sound a bit abstract right now, but I do have an example that we will run through, and I think it will become quite clear to you as to what to do. All right, then why do we apply the actual activity level in our budget calculation? So in the budget that you're going to calculate, you use the actual machine hours, actual labor hours, actual units produced. And this is in order to make sure that there is comparability between the actual amounts and the budget. So I put a note there to say, basically, we do not want to compare apples with pineapples. So you cannot compare a budget that is based on 1,000 units with actual results for 2,000 units that were produced. So obviously you can see that there is a fluctuance there in the activity level. We planned for 1,000 units, but then we were actually able to do 2,000 units. So the cost will automatically exceed this budget, not because we've been overspending necessarily, but because we have a higher output level. So we need to make sure that the budget and the actual amounts are calculated for the same output so that variances are not caused by volume. Right, costs that are involved in your flexed budget. So if we are calculating a flexed budget, there's a number of costs that we are working with, and these should already be familiar to you. The first one is fixed cost. So that is the cost that is the same at all budgeted levels. Then we have our variable cost. As the name indicates, it varies with the activity level of the budget. And then we have mixed costs. So this is the most tricky one when we are calculating flexed budgets, and this is because a mixed cost is a combination of a variable cost plus a fixed cost. So a question that students often ask me is, but ma'am, how do I identify the different costs? If you give me a scenario, how can I know for sure that this is a fixed cost, or this is a variable cost, or this is a mixed cost? So I have set up a few slides just to explain how you can identify this. All right, so the first one is the easiest one, and that is the fixed cost. So the fixed cost is a cost that is the same at all budgeted levels. So if we look at this little example that I've typed here on rental, you will see that we have a budgeted level for 1,000 machine hours, and we have a budgeted level for 2,400 machine hours. So you will find that for the budgeted level of 1,000 machine hours and the budgeted level of 2,400 machine hours, the rental expense is exactly the same. So that is how easy it is to identify a fixed cost. The budgeted levels will have the same answer because fixed costs should not fluctuate with activity levels. So I've put a picture of eyes here. So it simply means that if you want to identify the fixed cost, the only thing you need to do is you need to go and check whether the budgeted levels, different budgeted levels, contain the same amount for this type of cost. So in this case, it's the same, and therefore rental is a fixed cost. Right, the next type of cost that we have is a variable cost. So I've also typed an example here of a variable cost. So we have an example, labor wages. So now you will see that indeed they are not the same. If I look at my budgeted level for 1,000 machine hours, I have 20,000 rand. But if I look at 2,400 machine hours, I have 48,000 rand. So obviously these amounts are not the same, and therefore this cannot be a fixed cost. So you now need to go one step further and do a calculation. So we will do a calculation for each budgeted level, and in each instance you will take the rand value and you will divide it by the activity level. So for the 1,000 machine hour level, we will say 20,000 rand divided by 1,000 machine hours, and that gives us an answer of 20 rand. For the 2,400 machine hour level, we will say the 48,000 divided by 2,400 machine hours, which is also 20 rand. And now you will see that we get to the exact same answer after we've divided. It's 20 rand and 20 rand in every instance. So if you apply this calculation and then you get to the exact same answer, like we've done here in the instance of 20 rand, then you are dealing with a variable cost. As simple as that, you need to do a small division calculation. So it's not as straightforward as the fixed cost where you can simply observe that it's the same. However, when you do your calculation, you will see again that the answers are the same, and that makes it a variable cost. Right, next type of cost is the more tricky one. So how do we identify a cost that is a mixed cost? So the type of cost that I have used here as an example is electricity. So you will see with the electricity at the 1,000 machine hour level, it's 12,000, and then at the 2,400 machine hour level, it's 19,000. So obviously, again, it's not the same, so it cannot be a fixed cost. So again, I'm going to go back to my calculation of division. So for the budgeted level of 1,000 machine hours, I get 12,000 divided by 1,000 gives me 12 rand. And then if I look at the budgeted level 2,400 machine hours, it's going to be 19,000 divided by 2,400. And now you see that the answer is indeed not the same. So had you done this division calculation and the answers were 12 rand in both instances, we would be back where it would be a variable cost. However, you can clearly see now that these answers differ. In the first instance, it's 12 rand, and then in the second instance, it's basically 7 rand and 92 cents. So you can observe that after doing your division, the answers are not the same. And if this is your answer and the two answers differ after division, then this must be a mixed cost. Right, so now we've identified a mixed cost, but mixed costs involve a little bit more work. After identifying that a cost is mixed, you are now charged with the responsibility of also going and splitting this mixed cost into a variable cost and into a fixed cost. All right, and For flexed budgets, we apply the theory of the high-low method. So for the high-low method, we basically go and see for the electricity, what was the highest and lowest values in terms of rand and also in terms of the activity, which in this instance is, of course, the machine hours. So if I go back to the scenario, you will see for the budget, the highest machine hours was 2,400, the lowest was 1,000, the highest rand value was 19,000, the lowest was 12,000. And I simply typed it in to under high and under low. Then I calculated a difference. So you would see that the 19,000 minus the 12,000 gives us 7,000. And 2,400 minus 1,000 gives us 1,400. That is the difference between the highest and the lowest rand and activity. If I now want to calculate my variable cost per machine hour, so it's per the activity, it can be per machine hour, per labor hour, per unit, depending on the type of activity level in the question, then I will say it is the 7,000 rand divided by the 1,400, a difference in the machine hours. So I basically take the rand value and I divide it by the difference in the activity. And please take note how in each instance I use the difference to calculate the variable cost. And that gives me 5 rand. So the variable cost per machine hour is 5 rand. But then I also need to know the total variable cost in order to be able to calculate the total fixed cost. Because total variable cost plus total fixed cost will give us total mixed cost. So from this point forward, I like to use I like to multiply by the highest activity, because then I know that all my answers are calculated in the same activity format, basically. So I'm going to take the 5 rand I just calculated, and I'm going to times it by the highest activity level, which is 2,400, and that gives me 12,000 rand. Then I'm going to go and check to see, but what was the total mixed cost that was connected to this highest activity? And the total mixed cost that was highest here was 19,000. Now, I know that variable cost plus fixed cost must give me the mixed cost. So basically, the fixed cost then becomes a balancing figure. I'm going to say it's the 19,000 minus the 12,000, and that will give me my fixed cost, and that should be 7,000 rand. All right, so it is really just as simple as that. You are going to look for the highest and the lowest rand value and activity level. You're going to calculate the difference. The difference is used to get to a variable cost per unit. The variable cost per unit is multiplied by the highest activity. And then you also look for the mixed cost identified with that highest activity. And the difference between mixed cost and variable cost must give you fixed cost, because variable cost plus fixed cost is mixed cost. Right. As simple as that. I like to calculate it in this block because it's simple, it's straightforward, and I can use the same recipe every time and it works perfectly. Right, then the final bit of the high-low is then just to express the mixed cost. So basically now we will say it is 5 rand times the machine hours. So it's the 5 rand calculated there, plus the 7,000 fixed cost, which we calculated there. Right, so your expression will then be 5 rand times all the machine hours plus 7,000 rand for the fixed cost. Right, simple as that. Now, what I have done is I've set up a small example for us to complete so that you can also observe how you should approach your final answer. So in this example, I've put the 3 different types of costs. We have material cost, supervisor salary, and the telephone bill. So I have given you 2 budgeted activity levels. It's 10,000 units and 15,000 units. And then there's actual results, and the actual results were that we were able to produce 12,000 units. So I'm going to start with my calculations. So I'm not going to do a calculation for the supervisor salary because I can already see that that is a fixed cost, isn't it? It is 300,000 for 10,000 units and it's 300,000 for 15,000 units. So it's exactly the same. I can see with the bare eye that should be a fixed cost. The material cost and the telephone bill, however, needs to be sorted out. So I'm going to do some calculations for that. So for the material, I'm going to say it's 250,000 Rand divided by the 10,000 units, and that gives me 25 Rand. Then if I take the 375,000 and I divide it by the activity level of 15,000 units, I get 25 Rand as well. This means that it's 25 and 25, both budgeted levels give us the same answer after division, so this makes it a variable cost. Very important. I'm just going to highlight it for myself. Right, then I'm also doing a calculation for the telephone bill. So for the telephone bill, I'm going to say 205,000 divided by 10,000 gives me 20 Rand and 50 cents. And then 305,000 divided by the activity level of 15,000 units gives me 20 Rand and rounded 33 cents. So obviously this is not the same answer. Even if the difference is slight, this is not the same answer, which makes this a mixed cost, and I need to go and calculate a split in the block. Right. For the telephone, I said the highest Rand value was 305,000, lowest Rand value 205. Highest activity level was 15,000, lowest activity level was 10,000. So the difference in the Rand is 100,000, the difference in the activity is 5,000. Now to calculate the variable cost per, and now it should not be machine hour, but rather per unit, because the activity levels again is in units. So I'm going to say it is 100,000 Rand divided by the difference in the activity level of 5,000, and that gives me 20 Rand. Then I'm going to multiply this 20 Rand by the highest activity level to get to total variable cost. So it's 20 Rand times 15,000 units, and that gives you 300,000. I'm also going to go and seek the highest activity Rand value, the Rand value that is identified with the highest activity. So the highest activity was 15,000 units, and the highest value Rand value there that was relevant to it is 305. So I am filling it in. And then, of course, variable cost, total variable cost plus total fixed cost must give us total mixed cost. And therefore, the difference will be 305,000 minus 300,000, which gives us a total fixed cost of 5,000 Rand. This block works every time. All right. So what should your final answer now look like? All right. The final answer should now be based on your actual units. So we are going to say, for the material cost, we did a calculation and we said at every level, the answer is 25. So this 25 I'm going to use now, and I'm going to times it by the actual result activity level, and that was 12,000 units. So if I say 25 Rand times 12,000 units, that gives me 300,000. The actual results are already given to you. Please note that we do not edit the actual results. So when I gave you the previous example, this was the actual results and we don't change anything about it. It is illegal to change actual results when you are an accountant. So actual results are just copied into your final answer as they were given. So there's the 288, 306, 290, and 290, 500 as they were given in the question. Right, then the salary of the supervisor. If we go back to the example again, I remember that at each budgeted level, it was the same. So I should now also use 300,000 for my budgeted level. Even if it's 12,000 units, I need to use the same budgeted value for the supervisor salary at each level because it is a fixed cost. So here I'm filling in 300,000. Right, then the telephone bill. We need to go and estimate the telephone bill. So in order to do that, we need to go back to our block calculation. So I believe our variable cost per unit was 20 Rand and our fixed cost was 5,000 Rand. So in completing this calculation, we need to say it is then the 20 Rand times the actual activity level, 12,000 units, and to that we need to add the fixed cost, and that is a total of 5,000. Please note how I use the variable cost per unit in estimating the mixed cost. So if I say 20 Rand 12 times 12,000 units and I add to that 5,000, my answer is 245,000. Right. In our final answer, we are not yet done because now we need to go and indicate whether the differences between this budget at actual units and the actual results are favorable or unfavorable. Is it good or is it bad? And this is really a simple argument. So you will say in this argument, all right, the budget allowed me to spend 300,000 Rand. In real life, I actually spent 288,000. So I spent less money than was available, isn't it? I was good. I did not overshop. I actually saved some money. And the difference there is that I saved 12,000 and this is going to be favorable because I was able to spend 300. I really spent 288. So I was good. So it's favorable. If I look at the salary of the supervisor, the budget allowed me to spend 300,000. What did I really spend? 306. I overspent in real life by 6,000 and this is unfavorable. I should not be overspending or spending more money than the budget allows. Then my telephone bill. The budget allowed me to spend 245,000. What did I really spend? 290,500. Quite a big difference there. It is 45,500. And now I overspent again. This is what the budget allowed. The budget allowed 245. I spent 290,500. I overspent and therefore it is unfavorable. All right, so this is what your final answer would look like. It's a lot of little calculations. It's really interesting. You need to go and see, is it a fixed cost? Is it a variable cost? Is it a mixed cost? If it is a mixed cost, you need to go and split it. And after doing your split, you need to write your final answer and make sure that you calculate the budget at the unit level that is identified with the actual results. All right, I hope that this lecture has helped you a little bit and you will be able to apply these principles and calculations when you attempt the homework questions. All right, until we see each other again, please keep well.